Buying or renting a home, that's a big decision in life, and today I would like to help one of my nieces. I've got 5 and 1 nephew, my brothers have been busy. I'd like to help her to actually decide how she can take a decision on buying versus renting. I will talk specifically about first home buying versus renting, and we will look at it through life goals and also the financial considerations that you need to have about it. My name is Greg Angelbert. I'm a life and personal finance coach, and I've reached a high level of financial independence. I didn't get there with magic. I'm saving, I'm basically building my investment portfolio, and this Cup of Coffee channel is there so I can coach you to take action and build wealth in your life. Let's talk about life goals first. What's important for you right now in terms of life goals? Ask yourself the question, what is important for you in the next 10 years? What is important for you in the next 20 years? You're not sure? You're actually confused about what you want to do with your life? Well, that's the case of most people, and particularly if you're in your 20s, you should be feeling that way. Understanding your life goal is pretty important, even if they are quite short term, to actually move forward on deciding between buying and renting. So if you want to take a look at this video here and here, then you'll be able to see how you can build those life goals and have more clarity in front of you. One of the best ways of building your life goals is to have somebody listening to you and actually interacting with you, asking you a question. Whether it's your partner, a best friend, somebody who is able to actually extract from you what's already in you. I'm a personal finance coach, I'm a life coach, so if you want to actually book a session with me, just look at the description and we can talk about this. You're still not sure about your life goals? Okay, no problem. Let's work on the cheat sheet, which is going to be able to let you take a decision on buying versus renting with some simple goals in life. Let's do this simple exercise. So for the following statement that you will see, rate from 1 to 10 whether this statement is actually applicable to you. 1 would be not at all and 10 completely. And try to keep in mind a time horizon of about 10 years. Let's talk about buying first. So do you want stability for growing a family? You love the environment and community where you live and you want to stay there long term. Renting is expensive versus owning where you live, in the area where you live. You want to buy so you can renovate and start on the investing property ladder, so increasing the value of your investment. Or you're an investor and there is an opportunity to buy at a discount right now. For renting, you want to move around geographically to experience different cultures. You want peace of mind and simplicity for what happens with your property. Owning is expensive versus renting where you live. You like investing and want to build savings for investment. Or you believe that you will be able to upsize as you progress with your earnings. Now make the totals and basically compare the two numbers. This is a bit simplistic, but in one way what it will give you is a number. On the other side it will give you a feeling. Does it correspond to what I feel? Is the result actually something that makes sense to me? You know, is my gut telling me, no, I don't like this result? If you don't like this result, that's okay. It basically means that there might be other factors which are pushing you in a certain direction. You can add them, you can rate them. And if you're okay with this rating actually, and your gut feeling is telling you, yeah, this rating is actually working for me, this is going in the direction of, let's say, buying, then take a look at this, and in the future you should make sure that you will actually revisit this, because factors might change about this decision. So it's good to look at it every year and actually say, is this changing in terms of life goals? Is my environment changing? Am I changing in terms of the goals that I have in my life? The bottom line is that you need to be sure about what are the facts behind the ratings that you put. So for instance, there are some aspects which are about building a family, for instance, which are very much a feeling, so you need to measure that feeling. It's not easy, but that's important to do. Others, which is about like whether it's expensive where you live to rent or to buy, those are very factual things. So it's always good that you actually build the facts behind it, so you just don't have a score, but you make sure that you have the facts behind the score. You're liking this video so far? Well, you know what to do. And also, don't forget to subscribe and put the notifications on if you want to receive more videos like this one in the future. So, back to my niece Nathanielle as an example. She is 25, living in Paris with her partner, and they are pondering the rent versus buy question. They currently pay 1,300 euro in rent for a 42 square meter apartment in a decent part of Paris. Assuming buying with 0 down payment and a property price of 450,000 euro, 5% acquisition cost, yes, France is expensive for that, so a mortgage of about 472,500 euro over 30 years with a mortgage rate of 1.57%, that's what you can get right now. Property taxes of about 1% per year, that can be different depending on where you live, and a maintenance of 1% per year. And we assume an income tax reduction of about 10%, which you can get in France right now if you buy some property. That gives you the total cost over 30 years of 846,877 euro compared with 480,200 for renting here. Now, this money difference between renting and owning, if we are renting, then we have invested it every year. And let us say that at 5%, so that's a decent return without being too aggressive. We're talking net of inflation, meaning that inflation is considered neutral for cost and investment over the period. The total investment return, which includes both the capital and the interest, will be 853,260 at the end of the period. And if we compare that to what you could expect to be the price of the apartment after those 30 years, which we see here with 3% appreciation per year, which is a good long-term number, you get close to 1.1 million euro. So the winner is owning. And do note the assumption that there is here for the salaries that you need to pay for the loan. That's considering 35% of net revenues. That's something which is quite typical in France and in other parts of the world. What happens if we take this 30 years loan and we buy the property, but we resell the apartment after 10 years? That might start to feel a bit small after 10 years to be in 42 square meters, so maybe there's a better salary coming in and we want to upgrade where we live. You would have to repay the rest of the loan, though, which you can see here, and the property increased in price, but not by as much as what we've had in the previous scenario. The net amount is 177,446 when you remove the payment of the loan that you need to do. And for the renters, they've been able to accumulate capital and to actually have interest rates which amount to 162,000 euros. So ownership wins, not by much, but a little bit. And what happened if we change the mortgage rate, considering that you might not get a fixed rate for 30 years, and if we look at the past 30 years, in average, you would probably get something around 4%. Then considering that you would have actually over the period enough money to actually pay for that loan, you'd be able to see that the renter will have a capital in total and plus return on investment of 1.3 million versus 1.1 million for ownership of the house. Keep in mind that with a higher interest rate on your mortgage rate, you will be needing to have a salary of 120,000 euro per year to actually be able to take that loan. And what happens if we change the investment return? Let's assume that the renter is very focused on actually getting the best return possible. So they're working hard on learning, on getting the best return instead of, an average return. So let's just put 2 percentage points more at 7% per year. As you can see now, the investment return over 30 years is 1.2 million. And we can see that compared to the property appreciation, which is still 1.1 million, now renting wins. And let's use a bit of a crazy scenario with saying that we would take a 10-year mortgage without down payment. The interest rate would be lower, obviously, so that's a good thing, but obviously the reimbursement would be much faster, so a lot more costs every month. As you can see here, we basically end up with property appreciation after 10 years, which would put the apartment at 605,000 euro, versus a return on investment for the renter, which would be around 520,000. Now, keep in mind that for that, to take a loan like this, you would need an annual salary of 215,000 euro, which obviously is not the case of my niece. Have I answered the conundrum for my niece? Well, actually no. It's for her to take this decision based on her life goals and also on working out the math as we just discussed. But hopefully this will give you a framework that you can use for yourself, and also for her, to actually build this decision and feel more comfortable with it. Until I see you next week, make sure to go out there, look at your wealth, take some decision about it, act upon it.